Hello everyone, it's Friday, July 25. Today we're taking a closer look at the euro and British pound charts to assess potential market movements. The euro held firm at one-week highs following the European Central Bank's latest policy decision. The ECB left its key interest rate unchanged at 2.15%, marking a pause after more than a year of consistent cuts. The deposit rate was also maintained at 2%. At the post-meeting press conference, ECB President Christine Lagarde said the rate path remains uncertain, citing US tariff policy as a key risk to Eurozone growth. She noted that with inflation at 2%, the ECB has room to adopt a wait-and-see stance, and further monetary easing is in question. Much will depend on how US President Donald Trump's trade measures impact inflation and the broader European economy. For now, conditions remain relatively stable. However, Lagarde expressed concern over the euro's strength and rising government spending on infrastructure and defense. The market responded with long positions in the euro, though the rally lost momentum later in the session. Mixed US data limited the euro's gains. The manufacturing PMI slipped to 49.5 in July from 52, pressured by trade-related headwinds. Meanwhile, the services PMI rose to 55.2 from 52.9, lifting the composite index to 54.6, which is a broadly positive signal that the US economy remains resilient. Now let's turn to today's macroeconomic calendar. It features UK retail sales, which are expected to have increased by 1.2% in June, rebounded from a sharp 2.7% decline in May. Germany will release data from the IFO Institute, including the business climate, current conditions, and expectations indices. Forecasts point to modest gains across the board, and stronger than expected results could support renewed euro strength, potentially pushing the currency to fresh one-week highs. Later in the day, attention will shift to US durable goods orders, which may offer further insight into the direction of the dollar and the broader market. From a technical standpoint, the 1-hour EUR USD chart suggests that false breakouts at 1733 or 1714 could present buying opportunities, anticipating a continued bullish run. Long positions on a rebound could be considered from the 1.1683 level, targeting an intraday correction of 25-30 pips. Bears are expected to step in around 1762 or at the one-week high of 1787, where it would be wise to go short after a false breakout. The primary downside target in this case would be the midpoint of the current intraday range. Short entries on a rebound would also be justified at 1825 with a potential move of 30-35 pips. As for the British pound, it has slipped quite noticeably. Yesterday's economic data was mixed. Manufacturing activity contracted at a slower pace, with the PMI coming in 49.2 versus the expected 47.7. However, the services PMI fell to 51.2 in July from 52.8 in June, moving closer to the 50-point mark that separates expansion from contraction. This signaled risks to the UK economy, and the pound sterling dipped in response. As a result, traders are in no rush to build long positions in the British currency. From a technical perspective, long entries could be considered on a false breakout at 1.3472 or 34.36. A rebound from 34.02 may also offer buying opportunity, targeting an intraday correction of 30-35 pips. On the upside, selling opportunities could emerge at 1.3516 or 35.50 if the price fails to hold above these levels. Short positions on the rebound from the one-week high would also be reasonable, aiming for a 30-35 pip pullback. Best of luck to all.